All right, hey guys, it is time for another video. We are going to take a look at the usual suspects through the lens of Elliott wave theory. And we're going to start out with crude oil, then we're going to hit metals, the dollar, and the Nasdaq. All right, let's start off with the crude oil chart, looking at the daily. What's interesting is where this breakout has now entered. It has entered this zone, which is quite often a zone that we can look for a reversal. And in this case, we are bearish. We've been bearish in crude oil for quite a while, and it's moving in threes. Now, if you've been following me for any length of time, you know that when I'm measuring for anything in a three-wave move, I use yellow labels, usually ABC, and yellow fibs, usually looking for the 100, the 1236, or the 1382. Whenever we are measuring for a three-wave move, we are looking for the C wave to terminate somewhere between the 100 fib and the 1382 fib extension. Okay, so what I've got here on the daily crude oil chart, by the way, this is the February contract using the NYMEX data feed, going all the way back to the last high back in the summer. And what we have is, I think, a three-wave move down for wave one in a diagonal. And as you may know, if you're an LA wave guy, diagonals can be composed internal wave structure, three waves. Usually a wave one and a wave three and wave five are composed of five waves. In other words, they subdivide into five waves. But in a diagonal structure, waves 1, 3, and 5 subdivide into a three-wave structure. This makes tracking any diagonal much more difficult and challenging. But having said that, I think we're doing pretty good. So what we have here is an ABC down for wave 1. This is measuring just shy of the 1236, certainly reasonable for a three-wave move. Then we have another three-wave move in the opposite direction, which exceeded the 1382 just with a wick on the daily chart. And then we entered an area of extreme complexity. Man, do I hate this. It's just very difficult to track. But that in itself is a clue. Extreme complexity. So what might it be? Well, if you're looking for a B wave, perhaps you're looking at a B wave triangle. If it's in wave 4 position, I would label it in blue, and it would be considered a wave 4 triangle. Those are the two positions you most frequently see a triangle, is a B wave triangle or a wave 4 triangle. So in this case, I can measure this initial move down as three waves. Okay, you can see the yellow fibs here coming up just shy of the 1236, very similar to how this initial move down moved in three waves and also came up just shy of the 1236. Same internal structure over here. So this is what's so maddening. It made initially a higher high. Well, initially at first it made a lower low. Then it made a higher high. Then it made a higher low, lower high, higher low, lower high, higher low, and then it finally broke out. But the point is, if you're trading this, it's very difficult. But this is a clue. It looks to be some kind of a triangle. And in this case, with these higher lows that I just described and the lower highs that I just mentioned, this would be a contracting triangle. But then what we had towards the end of last week is a breakout. But having a bearish view that I do have, and I'm not going to get into why, but I've covered that in previous videos. I've got a bearish bias based on structure. And at the moment, we've got a series of lower highs. Okay? And initially, a series of lower lows. So if you just take this 76.41 as the ceiling, and this 63.73 is the floor. So you have a $13 range. And what we were doing is contracting. The range was contracting. Okay? And then it broke out. So the way I'm counting this breakout is in a three-wave move. So my view is that oil is very near a local top. So a parameter of sorts would be 75.22, because if this is a B, and by the way, I'm just viewing this whole thing as a B wave, because wave 3, see this white 2? So the logic, right? 1, 2, 3 is next, lower. So obviously a key parameter is 76.41 on the February contract. I'm looking at the daily chart, February contract crude oil. 76.41 is an upside parameter on this daily chart. Do not, if you're a bear like me, you do not want to see it get above 76.41. If it does, I'm just telling you now, I'm going to consider that still a B wave until it gets above this previous high on the daily chart, which is 80.14. Now, I know I'm giving you these wild parameters, but look, these are the actionable parameters on the daily chart. So bulls want to see above 76.41 initially, and then bulls want to see above 80.14. Same is true for bears in reverse. So bears are all looking, now bears were originally looking for a top lower, but now it is extended in this B wave, I think. I mean, I'm calling it a B wave until proven otherwise. So that's a deal. And this wave 3 should be composed, I mean, in white, this wave 3, which projects down to here, as long as this box holds as the top, then the minimum target for this wave 3 is, well, 63.73, but I think it gets below that and comes down here. Why not? And tag, come all the way back down here and tag. Well, there is support here at 61.18, and there's a 1382 fib in yellow, which you already know what that means. If you're measuring for a 3-wave move, the C wave, in this case, it would be C of 3, should target somewhere around 61, give or take. So, but the real game that we're playing right now is find the top. So 74.57 is his next fib up. Could it come up, poke above that some? Sure. So somewhere in this yellow box is what I'm looking for the top. Before I leave the daily chart, looking at these technicals, man, you can see the histogram on this bottom panel tool, which is the TTM squeeze tool. It does show that all of a sudden, after a long period of flat momentum, that's the way you view these histograms on the bottom tool, is momentum. You finally broke out of this range. I mean, we don't need this tool to tell us that. We know we were breaking out when it broke out and then back tested, held support, and then got nothing but green candles. Look at all those green candles. I mean, basically all week long. And my buddy Armando inside of the Professor Trades Club, I got to give him credit. He was bullish over here when I was bearish, just based on Elliott wave and the parameters and these levels. I thought it was going to fail after this last top over here, but it didn't. And my buddy Armando nailed it, guided the membership to stay long, to get long initially, and then to stay long. And boy, did that pay off for those members. I am not one of them. Okay, I was wrong. And now the next best idea is that this is the topping range up in here. The technicals, yes, they're bullish, but they're extreme already. Like, especially this oscillator, this RSI oscillator tool. You see every time it gets to this red line, typically indicates some kind of a top, at least some kind of a top. So this tool is now at the same reading as it was for this top, except for this much higher. Now, these other technical tools did have room to go higher, which they certainly have, and they're just reflecting all of this upside momentum. But they are also, even though I didn't put a line on this tool, see the dotted line that marks sort of the top on this MACD? This is the area that if you go back in time and look at these other tops, this dotted line is where the fast moving line does see a reversal. So it is there. It is there. Similar on the MACD, actually, now that I look at that. So all of these tools are suggesting possible topping. This tool is suggesting there's still momentum. Now, I can't account for that. If we break above here and keep going, then all I'm going to do I know this is going to disappoint you because a lot of you guys want me to predict the future and just tell you what's going to happen. Can't do that. I can give you parameters though. So if it breaks out above this box, I mean, it's going to pull back at some point, but the 1618, if it keeps coming, it's possible that this is really a 1, 2, 3. And then if we hold support as a wave 4, do not come back down anywhere near this 68 level. Don't, in other words, don't even get below 70 really. Well, as we know from Elliott wave rules, it would be this actually. It would be where I have that A wave. If bulls are in charge, your price is not going to come back down below 71. Okay, I think I just have such a bearish bias. I have a hard time projecting bullishness on a larger scale. I'm much more comfortable looking for a top somewhere in here. But, we use Fibonacci, so if it wants to come all the way up and tag that 1618 or even pop above that, which is 75.68. But, I'm giving you, I think, decent parameters enough without using Elliott wave, just based on basic price action, which is 76.41. Got to stay below 76.41. Definitely don't want to see way up here. Okay, so now let's just go down one more level to the 4-hour chart to look at a little more detail. Now, I'm not going to go back and cover all the stuff that has already happened to the left. Here was the potential triangle idea that I would have preferred to have held, and then we break down. But we didn't. We broke out. Now, what's interesting on this 4-hour chart, also actually this is the continuous chart, so it's a little bit different. But the idea is it broke out above this downward triangle top, back tested it with that wick. I mean, really well, just beautifully, and then ripped all the way up into here. So the kind of fibs that I'm looking at, if this didn't top already, which is possible, I don't want to get all into the weeds of this internal structure, so I'm just going to leave it at the 4-hour. If this didn't top already, then I like this cluster of fibs just above where current price is. I like somewhere up in here as an idea to sell based on structure. Now, whether it is a swing sell or a scalp sell, I don't know yet. I mean, of course, my bias is as the swing sell, but there's a better way to confirm that, and we just need more price action. And if you're inside of the Professor Trades Club, you're going to be getting these updates on a daily basis as I keep track of oil. So if it didn't top already, okay, then I like it to come up into here and top. Okay, and if it just keeps going, what was that level we had over here? 76.41. So that's quite a bit. That's $1 above this zone. So I just, for immediate day trader scalpers, I do not want to see even above 75.65. Honestly. So this is the idea that if it didn't top already from here, then I like this area as a more lasting top. Now, what we're going to do inside of the club, which if you remember, you're going to get this information. Otherwise, you're going to have to wait until Wednesday when I post the next video. But if you come inside of the club for just slightly more than $1 a day, you're going to get these updates, because the real safe way to play a swing short, if this is going to make it to all the way down here to 61 or lower from up here, which is a crazy move, right? That's an enormous move. So, but I'm not just going to predict that and say, okay, refinance a house and go short everything in oil up here. No, if you want to play it the safe way, let this top. Let it top. And what we're going to track for is a smaller 5-wave move down, and then we can layer into shorts on the bounce, on the corrective bounce. So if you want to play it safe, you wait for a 5-wave move down, and then you're going to look for a 3-wave correction to layer into shorts. And if you really want to be conservative, let's say, now I'm just using random numbers, whole numbers to make it easy to understand this. If you wanted to just say expose yourself to $1,000 of risk to get a swing short in crude oil targeting 61 or lower, what I would do is do nothing. Wait for rejection. Wait for 5 down. Okay. And if you're in the club, you're going to know this, because I'm going to be measuring once we get some initial moves. Once we get a legitimate wave 1, which is going to be composed of 5 waves, which would be really the one of A, because wave 3 is going to be composed of 5 waves. So once we get a legitimate wave 1 down, we're going to sell the retrace. Okay? So in other words, just a strong move to the downside followed by a corrective move. We want to sell into that corrective move half. So in other words, if you were going to risk $1,000, get into it for half of your position. So $500 you're willing to take. In other words, when you enter your shorts, if you get stopped out, which is going to be wherever the top is where your stop is. So wherever this tops out, you wait for an initiation move down, and you do not initially buy until it comes up to at least 382 retrace of that move down. And there you get your first short position. If it keeps coming to the 50% fib, you add your second short position. If it comes up to the 618, you add your third short position. All 3 of those positions should not total 50% of your total risk allotment for this trade. You rewind in this tape if you need to and write that down. It's very common. It's a normal kind of trader approach, tactic. All right. And then what you do is if you get the 5 down or the beginning of whatever the initiation move down, then you've got the retrace and now you're short. And if it does not come back up and make a new high, you just sit on your shorts and do nothing until price breaks the low of that initial wave down. There, once it breaks the low of the initial move down is where you're going to deploy the remaining 50% of your position, and then you don't touch it. Okay? And that's going to be hard. This is a swing position type idea. All right? So now I just said a lot. That's probably too much, but I know you guys just want levels because you guys that already know how to trade, you don't need to hear me talking about that. But if you're new to trading and you're new to figuring out how do you use Elliott Wave to trade, a very standard, basic, perfectly good way to trade Elliott Wave on the short side is do nothing. Don't try to pick the top. Wait for an initiation move. Wait for the retrace. Short that. And then once it breaks that initial low, then add, and then do nothing. Do nothing. Okay, cool. Except wait until you get much further down towards your target, and then you start taking it off incrementally. All right, so you've got my chart. Let me enlarge this for those of you on a phone or a small screen. These are the parameters. If it didn't top already, then I like anywhere from 74, really, you could start layering in shy of that. So just call it 74.60 all the way up to 74.89. You know, I'm giving it leeway because these levels are zones. So the box itself, I think, is a reasonable place to layer into some shorts if you hadn't already, if you want to wait. Now, I mean, if you don't want to wait for that more conservative approach to Elliott Wave, if you want to use Elliott Wave to try to identify where the top is, these fibs are legit. The purple fibs are the internal structure of the smaller degree. The white fibs are the larger overall structure, with this being a potential 1-2. Okay? So it is possible that this is a potential 1-2. And if that's the case, these fibs in white, it's already exceeded the 200 fib with these wicks, which is why and this could be a 3-4. But if that's the case, I actually think it needs to come up higher. I do. That's my bias. If it didn't top already, it's going to come up higher somewhere up into here. And it could potentially pop above there, but a reasonable stop for a scalper day trader trying to pick the top, if it keeps coming above 75.65, it's opened the door for a whole nother dollar higher than that. So, you know, if you want to be really conservative, you layer into shorts between here and up through this box. You could use the same tactic I was just describing. If you're going to risk $1,000, deploy 500 of your risk up into this box and do not add if it comes above here and hold. And then if it gets above here, either wait for a retrace to stop out of your shorts at a smaller loss or just stop out up here at max loss. which in your case should be $500. Calculate it so that you're only losing half of whatever you want to risk for this swing short potential. Okay, now that I've talked too much, let's move on. Okay, gold. Actually, before we move on, let me just mention this. The Professor Trades, that's a club founded and operated, managed, moderated by Armando. My man Armando is killing it, has been killing it, has figured out a lot of things, mostly about the psychology and how to day trade and scalp and grab gains quickly. That's his specialty. That's his thing. He has a very simple, elegant, and effective method of identifying support, resistance, supply, demand. He's a master scalper. There's no other way to say it. So the prices have just gone up at the new year. Why? To account for the Elliott Wave Room. All the members in the club have been getting the Elliott Wave stuff that I provide at no additional cost. We're only increasing the fee by a Fibonacci number, which is 618. So for $6.18 additional per month, $6.18 per month additional, you're getting the Elliott Wave guidance that I'm presenting right here. I'm providing it on a daily basis inside of the club. So the total bill for the whole club plus the Elliott Wave is just over $1 a day. So it's still a no-brainer. That's my plug. If you're trying to learn how to trade and you need help, if you're the kind of trader that's been moving your stops, if you've been blowing up accounts, if you've been frustrating yourself to no ends and you're thinking this is just crap, it doesn't work, trading is bull crap, come in the club, join us. You will find out that that's not true, that there is a way forward for you to get a handle on yourself, control your psychology, control your emotions, learn how to identify parameters. And that's really the strength of Elliott Wave. It's the parameters, not the predictions. Yes, it has a predictive quality. Of course it does. But nobody knows the future. Nobody. No method is going to tell you this is what's going to happen and this is how you're going to make money for sure. No. But Armando is going to get you pretty close if you can learn, if you can open your mind and stop trading, size down, get a handle on your psychology. All right, that's my plug. The link to Armando's club is in the description of this video. Let's get back to the chart. Let's move forward on to the metals. Here's a daily chart of gold. As I've been saying, I don't think this is enough for wave 4. I don't think this is a wave support bottom. I think it needs to come down lower. Can I be wrong? Am I open to being wrong? Absolutely. One thing that is good towards the bottom being in is this is burning off more and more time off the clock, which I like because of I didn't label this because I made a new chart last week. I flipped to the February futures contract COMEX data feed. February futures gold contract COMEX data feed. And I didn't want to relabel everything every time I change a contract. So I'm just focusing on where the action is, which is right here. So ideally, gold comes down into this blue box, at least to the top level. Just call it 2,500. I mean, I've been saying this ever since it topped, going back to October. So here we are in January, and I'm still looking for the blue box. I won't get into the weeds of all this. Let me just give you some parameters. It is always possible that this is a B wave and it's going to come up higher. It is also possible that this is just going to top out in this gray zone somewhere, and that really what this is 1, 2, then we get a 3, 4, 5. We are looking for a 5-wave move to finish off wave 4 in this blue box. And as I always say over and over and over again, these yellow fibs is when I'm clocking a 3-wave move, looking for the 100 fib to the 1382 fib. I didn't put the 1382 on here. Just based on how much price action has already happened, how much time is on the clock. I don't need to look at the 1382 yet. I think it will project just fine, not having to go that deep. And here's what I'm saying. This is probably what happened. I probably took off the 1382 on the daily chart when I got in here on the smaller degree, and consider the idea in gold that after this move down, we have now got a 3-wave retrace in place and a rejection. And if this is playing out as I've got it drawn up here, which is just as I was saying, 1, 2, 3, and this would be a diagonal for this last 5-wave move down, This structure is so janky over here, and especially in here. That's why I don't really like this as an impulse to go higher. There was nothing about this that measures well, very asymmetrical, kind of, it's just corrective. That's a clue in itself, is when it's complex, asymmetrical, doesn't really follow any standard move. That's correct. That has me thinking it's more of a correction. And it can't get any traction to the upside. Yeah, it has these moves to the upside, but then you have what looks more impulsive to the downside. When it moves higher, it's moving higher more correctively. When it moves down looking more impulsively. So to me, that's a clue. So as of right now, I happen to be short, and if I'm wrong, it's gonna the first thing it's gonna do is come up and play around 27.04. Had this come up directly, it still could come up directly into here. That's gonna go a long way towards, if it makes it up to this 2700 level before it gets anywhere down in this open space down here, then I think it leans more towards the bulls. But the real story is it needs to come up here and get above this level of 2750. So already this looks so, the structure is ugly. Like even if this is a 1, like the only way I could be bullish here is if this is a 1, 2, and then now we're building out either another 1, 2, or maybe this is the internal wave 3, and it's just the structure is janky. That's why I'm measuring it the way I'm presenting it here, which is that this is a 1, 2 to the downside, and that we will come down below this pivot and keep going. If this happens, I think it's going to bounce around in here, but if it starts coming back down, I like this area to bring it down, to dip below this 2560 level. It's going to bounce, right? Price never, ever moves in a straight line. So when you see these targets, even this target, don't think it's just going to move straight down there. Of course not. I'm just saying that for any beginners that are out here and looking at Elliott wave labels, it might imply that it's just going to move directly to these levels, but I'm not saying that at all. Okay, I'm just giving you parameters. So that's the deal. This pivot zone, which is based on an Elliott wave idea, if it's going to catch support and go higher, this is where it needs to do it from, in my opinion. So if it keeps coming down, it gets through here, that's going to give a lot more credibility to the bears. And then, of course, it'll have to hold this top and not get any substantial bounce. I mean, it's going to bounce around because this wave 3, this wave 3 should be composed of 5 waves. So we get a 1, something like this. Get down below the pivot and then hold the pivot as resistance for wave 2. And then the internal wave 3 should get down below here. And then wave 4 should be held somewhere up in here. And then we get one more shove down. So wave 3 would be composed of 5 waves. If you're inside the Professor Trades Club, I'm going to be giving guidance as to what's going on. If we continue to move lower, I'll be measuring and giving guidance inside the club. And then the idea is if this 2550 level holds, then the idea is we are done with wave 4. And then we're going to get a wave 5, which I haven't even measured for on this relatively new chart, but is a lot higher. So, all right, that's the parameters, right? You got all the parameters. I'm enlarging this screen. You can write down these levels, okay? The ones in green are the ones that relate to the bullish structure, and this pivot zone relates to both bullish and bearish. That's why it's called a pivot. It's a critical area. It's either above or below the pivot zone. That's a clue. And then this sell is very obvious. If it comes down, 1 wave gets a 2-wave bounce, and then you can short wave 3 of 4. Well, it's really 3 of C of 4, but, that's alphabet soup. If you're an LA wave guy, you know exactly what I just said. No problem. All right, so that's the deal. Silver, very similar. Here's the daily of silver. I've been saying the same thing. Is this enough for all of wave 4? I don't think so. Even though it got this rip up, I didn't trust it. Still thought it'd need to come down to the blue box. Now silver is much more difficult. Dang it. Because why? Well, it did make a lower low, which we were expecting. But I see this as just 3 down, where wave C of 4 should be 5 waves. So if this is now more complex, it is bouncing. It did not make a lower low. As of right now, where I have that circle, that's the last low. By the way, this is a continuous futures contract on the COMEX data feed. So this did not make a new lower low here. And it's bouncing like crazy, but it's also getting some rejection right here. So you could view this as still in wave 4 with needing a 5th wave of C lower, coming down here to at least 28.27. Ideally, wouldn't that be cool if just call it 27.50? Because if this is a C, I like this better because of the internal structure, that it comes down to 27.50 or more or lower. So, and if it's bullet, now let's drop down to the 144 minute. Now look, silver's tricky, man. So just keeping the parameters really simple. If it comes back up here and gets above this high, I think it's much more likely that you're going to see 31.37. And that's going to go a long way towards proving up the bottom being in, but it's not a slam dunk at all. Why? Because if this corrects from here and then makes it up to this 1618 level, that is still going to be just 3 up. What you want us to then see is a wave 4 and a completed wave 5 that gets above 32. Then you get a 3-wave correction that does not make a new low. Then if it comes back up and gets above that high, now you're in the 5th wave of silver, likely going to 40 at least. So the parameter for right now is, did this already top and now it's coming down? The way I'm thinking of this, if it can get back below this low over here, it's not a bad idea to sell that, because the way I would be viewing that is this is wave 4 in here and this is the 5th wave. So what you'd get is a small little degree, 5 waves down, then a bounce for correctively, and then sell that. And then as it comes back down through here, sell more. By the way, are you seeing the theme? And actually it's just coincidental that every instrument that I'm showing you, the safe way to short it based on where we're at is wait for it to come down in 5 waves and then short the bounce. And as long as it doesn't make a new high from wherever it topped out at, as long as it doesn't make a new high, then the door stays open for the lower targets. And at this exact moment, this is where the target is if this is not going to come back up to this 31.37 level. You could almost drag this level over as another clue and give this a little bit more room to come up if it does before you go crazy, shorting into an uptrend. I mean, clearly you're in an uptrend right now. So the idea is wait, because it didn't hold this box. Ideally, this would have held already, but it did not make a new high. It is seeing local rejection. Okay, so unfortunately, this didn't come down where I thought it would come down, and it popped above it. Now it's kind of getting rejected. See that wick? This is only a 144-minute chart. So those are the parameters, right? Okay, and really it's 29.14 to the downside and 32 to the upside. I know that's a lot, but you've got these other levels in here to guide you along. And if you're in the Professor Trades Club, you're going to be getting updated twice a day on these charts in terms of where are they in relation to these levels that I'm showing you. I'm just going to make this a little larger for you guys on small screens. Okay, those are your parameters. That's the deal. I didn't put a down arrow, but the way I'm thinking about this, it's kind of like this. And then if it breaks through that, if it keeps coming, this is what I really like is 27.50. That's what I really like. And these vertical lines are actually timing fibs. So I think this is the window between this timing fib right here and this timing fib right here, which is Wednesday, January 22nd, that all of this is going to get resolved one way or the other between now and January 22nd. Just based on timing Fibonacci. All right. So what else? Nasdaq. Very similar. A lot of these instruments just coincidentally looking for the bottom of a wave 4. Is this enough for a wave 4? Technically, yeah. Does it look ideal for a wave 4? No. I think it needs to come down lower. Why? Well, look at the yellow fibs. Broken record. I won't explain this again, but if that's an AB, the C at least is 20,700. But because of the structure already that's in place, I think is more likely comes lower. To see that a little bit, and by the way, the ultimate target, if this is going to play out, this is speculative, but the ultimate target would be up here. Isn't that crazy? Whew. Not saying that happens, because it is also possible that the top is in. I don't think so. It measures really well as a wave 3. So what we're looking for, here's really the problem. I'm going to give you parameters to use with caution, because NASDAQ has ripped off more heads. Trying to think of a funny metaphor, but I'm not going to do that. But NASDAQ has killed more people and ripped off more heads than anything else, man. This thing, they call natural gas a widowmaker, but geez. All right, so the idea, this kept coming down much further than I would have liked. It would have been so great if this was the low here. Would have been really perfectionist, 5 down. So it is possible. Well, there's a bunch of possibilities, but because of the depth of this pullback, it's also possible to think of this as a B wave. What do I mean? It's easier to show you what I mean. Kind of like this. Now, this is just an alternative. A, B, C. So you're still, and let me just make that a different color. And ironically, I think that would be the same degree as the yellow one. So the yellow one is the one I'm really tracking, meaning I think we're in the C wave already to go much lower down into those yellow fibs over there. But if it needs another high without being bullish, without being ultimately bullish, it's possible that this is an A, B, which I know it made a new low, but it can do this. This is a pattern that can indeed happen. I don't love it, but unfortunately it happens because we're in a nonlinear complex system called markets. Nonlinear complex system called markets. So this is the best you can do. So A, B, C. If that's the case, and the reason I'm leaning towards that, at least putting it on the chart, is because of how deep this came. It's more consistent with a B wave than it is a wave 1, just internally. I'm not going to bore you with all my measurements. But the next best bearish idea is to see how this comes up and see if it can terminate in somewhere just around the 618 fib here and give you the beginnings of the C wave down in earnest. Okay. Otherwise, unfortunately, bullish action can retain if this is a really more impulsive, because this C should be impulsive. So I think if you get above 21,878, it's less likely it's a wave 2. But, I hate to make this video keep getting longer and longer, but the idea would be if this is somehow a 1, 2, or this would be, actually, I like that better, is this. Let's just see. I'm gonna just do a little speculative Elliott wave right here. If this were a C wave, oh man, I screwed that up. Hold on. If this were a C wave, I just want to see roughly where it would project to. All right, 21,261, just as close enough just to get this idea. So where's the 138? Oh yeah, 38. I want to look to see where the 1382 projects to. But if this is a 5 wave move, at least the 1618, okay, 22,000. So I mean that's the minimum. If this could come up in 5 waves and get up into here, but given the complexity and the volatility of the Nasdaq, see, that gets you to just put in some basic extensions, nothing crazy, just normal extensions that you can see. 22,280 would be like a minimum extension, 22,280, 22,300. So that gets you up in here. Yeah, 20. You see, so, if it's going to get 5 waves, yeah, so making it to 2,200, man, you're done. Now, look, this sell box I had on there from before. Let me see how relevant that really is. 21,700. Yeah, 21,700. So, if you want to get short, this sell box is not a bad place to do it from. That's a decent parameter, more clearly seen on this 4-hour chart. So, one way to play it, if you can stay small enough, layer into it, leading up to this box, leading up to 21,700. Layer into shorts. Maybe you figure out your risk, your definition of risk. You define your definition of risk with a dollar amount, which is usually based on a percentage of your total account size in your trade account. And then you decide how much of that you are willing to deploy on this potential short opportunity. And then you incrementally deploy that risk into this move. Okay? And then again, as I keep saying, whenever this tops, wave 3, man, this is diagonal, but wave 3 should be composed of 5 waves. So once you get that initial move down impulsively and you see a correction, deploy the remainder of your short. See, actually, we're doing it over here. You're deploying your shorts into this move higher. Okay? And then deploy the rest once you break the bottom of this low, which is 20, which is right here. So that's the way you do it. Actually, what I do on my charts when I'm doing this, I get rid of the 0 line and I actually just put the low right there and make it a little bit more prominent so I understand what it is at a glance. Then, so you deploy some shorts up into here, and then if you're swing trading, deploy the rest once it's down here, because that final wave of 5 of 3 should get you down to the 1618. All right. So I didn't mean to make this video talking about actual trading so much, because I'm really just about presenting the analysis and presenting the parameters. So a parameter of sorts is 21,878 to the upside. If you see above that, I think it's more likely you're going to see 22,300, 22,350. If you get above 21,878. Otherwise, what I think happens is we get some rejection up in here and we start a downward impulse. And then the real parameter is when you break 2980, and the ultimate target is down here, in my view, is down here 20,270. 20,270 is the ultimate target. The parameter is 20,980 right here. The other parameter is 21,870, which is right here. By the way, this is the March futures contract for the Nasdaq CME data feed. And the next parameter above the 21,870 is, just call it 22,300 to 22,350. That's the Nasdaq. Last thing, the dollar. Same thing. I show you this weekly chart every week. We have broken out of to a certain, on the locally, we have broken out higher. The options I gave you last week were we're about to either break down or we're going to break out. Well, it broke out. So we are still in the range for a B wave top, with the idea that the dollar is going to come down in 2025. And I think that makes a lot of sense with the posture of, say, the metals, for example. Because if the dollar does give up a C wave down, which in LA wave we nicknamed the C wave the crash-like wave, if we get a crash-like wave in the dollar, we're going to get a reverse of a crash-like situation in metals. Historically, that's what happens. I don't trade correlations. I'm not promoting correlations, but listen, I'm not an ostrich. I'm not going to put my head in the sand. If the dollar comes crashing down by this amount, then it would seem logical. But I'm not saying it because of the correlation. I'm saying it because of the charts on the metals. The charts on the metals are looking for a bottom. The chart on the dollar is looking for a top. Those two things agree. That's cool. But I'm still viewing them each chart on its own. Okay, that's important. It's very important, especially if you're going to continue down this road of Elliott wave. That's a very important concept. Okay, so that's the deal. Can it come up higher? Absolutely. This, as I've been saying, this whole video, right? I keep talking about yellow fibs and how if I'm tracking a three-wave move, I'm tracking using the yellow fibs, and I'm looking for the 100 fib, the 1236 fib, or the 1382 fib, which are the typical fibs that create the resistance for three-wave moves. So, that's 111.11. It's already heading up there. Could the top already be in the dollar? Well, we need to drill down to a lower time frame to see that. But I just wanted to show you these parameters on the weekly. This is clearly a parameter on the weekly. This 886, can a B wave come up and even make a new high before it reverses? Yes, it can. In fact, it did that on the Nasdaq potentially, where it didn't reverse. It made a new low, and it might be coming back up. Where this, it is possible a B wave can make a new high and still be a B wave and then come down impulsively for a C wave. But that is less likely, but it's possible. So what I'm looking at is I then go look at the internal structure of price to try to get better clues about where is the top. So let's go down to the 2-hour chart. And the way I'm counting this, the reason I'm saying the top could already be in, and if you've been following me for any length of time, you already know about my ratio boxes and how many times does price come up and either tag the bottom of the ratio box. Sometimes it tags the top of the ratio box. Sometimes it comes up to the middle, especially when there's a fib inside the middle. Well, here, there is some confluence between this 1618 fib, which is just above, and the fact that price came up and tagged that level almost to the penny. I mean, literally, dead hit. And then it got rejected. So am I saying the top is in the dollar? No. Could the top be in the dollar? Yes. How would we best know if the top is in the dollar? Well, on a lower time frame, we look for 5 waves down. 5 waves down completed and a 3-wave correction that does not make a new high. And then price comes down after the 3-wave correction and gets below the level of wherever that initiation move stopped going down. So 5 down, 3-wave bounce, rejection, somewhere usually between the 618 and the 886, and then a continuation lower. And once you break the low where that initial initiation move stopped, once you break that, you should see some acceleration. And these are sort of the guideposts, 106.730, and the real one, which is why it's fat, is getting below 105.42. So these are the parameters. I know those are far out. I'm really just tracking the dollar to try to keep me clued in on some of the other currencies because so much is riding on the dollar and the metals. The metals are related to the dollar for sure. So if this comes back up, the 2 levels I will be watching for are the top of this box at 110 and the top of this box at basically a dollar higher, 110.955. And by the way, if I'm just totally crazy dead wrong, this thing can come all the way up to 113. No, that would be crazy. 112. It's a 200 fib. Actually, what does that do on the daily? 112.82. Yeah. Okay. 112. Yeah. So look, this is the extreme. And these fibs have been on my chart since way over here, but I don't talk about them much because, These fibs have been on my chart. These fibs have been on my chart for a while, but I don't talk about them much because I was looking for the dollar to top over here. But my arrows, they're good, man. My arrows are good. I told you if this breaks down, it's going to go down lower. If it doesn't, it's going to this zone. Well, it did go to this zone. Then it back tested it. And then I said, well, it's either going to break out above this yellow level, which is why I've highlighted it, made it thick. It's been on there for a couple of weeks. If it breaks out of there, we're going to this zone. Well, what did it do? It came right to that zone, got rejected, consolidated. Then I said, all right, if it breaks out above this zone, then it's going to this box. Well, it did, right to the box. Of course, I don't really know what's going to happen. I certainly don't know the future at all. But once you get good at making these levels, yeah, you can't predict the future, but at least you have solid parameters, which puts you ahead massively. If you can learn how to make these levels, you're way ahead of the game. So not that it gets necessarily easier. It's still a very difficult game because of psychology. So anyway, the case is we hit that, we're rejected. So first step, get below, and I really want to make this a zone because even though it appears that I'm putting like lines on the chart, you got to remember the lines are still zones. So you want to see it get below this zone. Okay, that's a clue. But this is also, if it does 5 down, then it's quite possible that it can come into this zone and then bounce. So it really needs to get below this zone and then back test it. But I'm going to dial this in on the lower time frames. If it continues to come lower, I'm going to dial it in and give guidance inside of the room. That's what I'll be doing all week long. If you're a member of the club, the Professor Trades Club, you're going to get this guidance. Okay, because if this isn't the top, then there's a couple other ideas right in here. If I'm dead wrong, we're going to know it. If I'm dead wrong, and it's going to, man, if this comes way, see, I don't think it needs to come way up there, but listen, it doesn't matter what I think. We're using Fibonacci and parameters, and here they are. Let me just enlarge this whole area for you guys on the smaller screens so you can kind of write down some levels or put these levels on your own chart. 109.536 is the existing top on the 2-hour dollar DXY chart. And then an initial clue is this zone down here, but just call it below 108.500. The real important line in the sand is 106.730, but the real mother of a level is 105.420 because of what happened over here to the left. 105.420, key parameter. These other ones are parameters nonetheless, but slightly less impactful. All right, cool. So that's $1. I've given you the best analysis I can give you, and I hope you're enjoying the parameters. Thanks a lot, guys. Give me a like. If you're new and you're watching, you're finding, whoa, this is valuable stuff, give me a like, subscribe, hit the notification bell so you'll be aware whenever I drop a video, usually twice a week, occasionally more. I'm committed to your success. I'm committed to you learning this stuff. I'm much more interested in teaching you Elliott Wave and showing you why Elliott Wave is so effective at creating the parameters. It is especially effective when you get into no man's land. Elliott Wave always has a way of giving you ideas like all-time highs. Once you get above all-time highs, what do other guys using other methods, what do they do? Elliott Wave doesn't have that issue. Elliott Wave always has parameters that show extensions. That's also one of the downsides, because psychologically you can be always looking at these wild extensions thinking, yeah, price is going to go there. No, you have to learn to figure out what is more likely. There are certain areas that produce highly likely trading ideas, and I've been showing you those today in the video. One of them is wait for 5 down, get a 3-wave retrace, short into the 3-wave retrace, and add only if it breaks that low again. That is an Elliott Wave concept, and it works the same for bulls. If you get 5 up, followed by a 3-wave correction, buy, layer into your longs, and then wait for price to come out and break that previous high before you add. This requires that you trade small size. Small is key. Armando helped me a year ago to size everything down. It's been dramatically improving my trades. Size it down. Get small, y'all. Anyway, thanks for watching. Give me a like. Give me a comment. Got a question? Hit me up. I'll get back to you. And remember, the links are in the description of this video. All right, you can also buy me a coffee. I love you guys in Armando's Club buying me coffees. God bless you. It's fun. I love it. $5, you buy me a coffee. If you're getting value and you're trading, making some bucks, buy me a coffee. It keeps me going, keeps me motivated to make these videos. That's all it is. Plus, I do drink coffee. All right, you guys. See you in the room. Take care.